I'm here in Dallas for REITWorld 2011, NAREIT's annual convention for all things REIT. Joining me is Dan Fulton, the CEO of Weyerhaeuser. So Dan, with almost 2 full years now under your belt as a REIT, how would you say the company has changed over the past few years?
We've been operating in a similar structure since 2009, when we separated our qualified timberlands into the parent company and then moved our taxable activities into a separate subsidiary. And in 2010, having gone through the conversion, having already made those changes, there wasn't a significant change in the way we operate, and there's no significant change today. We're still in the same businesses. We've continued to move along a path of some strategic restructuring. Recently, we sold a hardwood business and a shipping business, but that was a strategic intent that we had laid out before. It had nothing to do with the conversion to REIT, and so we've been really pleased with the way the conversion has gone. We've been pleased with the market reaction, and we're looking forward to being able to enjoy more benefits as the market recovers.
Okay. And as a timber REIT, obviously the weak housing market does have an impact on the company. How do you quantify that impact, and how do you plan to deal with it going forward?
If you look at the portfolio of 4 businesses, clearly our home building business is directly impacted by what's happening in U.S. home building. Our wood products manufacturing is heavily impacted because we manufacture products that go into the construction of new homes. We also sell into the repair and remodel market, which has not been quite as significantly impacted, but still touches U.S. housing. And then our timberlands business, the primary product that we produce off of our timberland are logs that are converted into structural wood products, and so we're impacted. Now, we do have some exposure to the export markets in our timberlands business, and so that's helped us weather the storm in U.S. housing, but 3 of our 4 businesses do rely on U.S. housing. And what's happened during the downturn is we've had to downsize those businesses accordingly based upon change in demand. We're positioned today for a recovery in housing. It's coming along more slowly than what we had anticipated. But our focus today is to be able to earn a profit at today's level of starts and make the changes that have been necessary through this downturn to position us for recovery.
Now, you mentioned your 4 business lines, and 3 of those 4 have to do with China. It plays a factor in that. How are you managing your Chinese-related operations going forward?
What we've seen over the last 2 years is a steady increase in activity in China as they have been growing their economy. So they've been significant buyers of logs, they've been significant buyers of lumber and also pulp. We saw a run-up in prices as well as volume over the last 12 to 18 months, but now we've begun to see a slowdown, and that started to show up at the end of the 3rd quarter, and it continues today. And what has happened is the Chinese government has stepped in, restricted credit, in order to slow down some price escalation and inflation. We believe that we're in a period of 1 to 2 quarters of adjustment. We expect that demand to return, perhaps not at the overheated levels that it had been over the last 6 to 12 months, but China will play an increasingly large part of our activities as we look offshore for markets outside of the U.S.
Great. Dan, thank you very much for joining us today.
You're welcome.
For more from REITWorld 2011, be sure to visit REIT.com.